Good morning to the people on the West Coast, and good afternoon to the people on the East Coast. Today's date is 2/15. It's 2014, and we have a monthly chart on Amazon. And that Amazon started off the year in a very high volatility price ranges. When they reported their quarterly earnings, this thing dropped like a rock in January. Now, it's been a number of years here that we see where Amazon's high was at 408, and then from the 408, that monthly low was 357 here. That's January. However, the selling pressures still went, and so it went down to 400, from that 408 to the longer move of 337.73, because that's what it did. This monthly high was 365, and this monthly low right here is 337, 365. This 10-month moving average is at 331 on a monthly level now. When we're looking at something to trade at support levels, we look to see where, and that's going to be the upper end of this resistance, is this area right here. This is 2014. We're going to have massive support here at the 10-month moving average as far as the monthly chart goes. So there can be more selling over a longer term. However, when we look at this daily chart, here is where that resistance was. Here's where this earnings was in this bar. This was your gap down right here. And then we went down there and made the lows, just like we showed on that chart. Now, just taking this piece of it, right now the reason why it's good for an intraday trade. I didn't say it was something that you had to hold overnight, MMT, by any chance. But we are deeply oversold in the technical world that people look at. So therefore, that MACD has been minus 10.6 on a daily level, and we have stayed down here for a number of days in the sell signal on Amazon right here. And we haven't had that kind of movement in Amazon. It almost seems like forever. So this is why, in the short term, that Amazon is a buy at support. This is the support level. Again, this was the lower level, and we're holding above the 10-day simple moving averages. Yes, everything on here is extremely bearish. However, there are great moves that can be made intraday, both the long side and the short side. When we start to look here at the weekly chart on Amazon, we come up with the reading of the following. And on a weekly level, of course, it's below the blue line, the 20-week, because it is. And this is this weekly support level. Now, it hasn't hit a weekly sell signal yet, and it doesn't really matter at this moment. It's an entry at support, and then a sell right up here in that half bar. You're below the 20-week moving average. You got the weekly percent DS getting down to 46. When we were overbought in Amazon, of course this thing was up here. It was peaking at 92% overbought. And this is what markets should do. They get this overbought, they need to come down. And what I'm saying, what happened with Amazon here, is the broader market on an individual stock basis is going to have some similar events going through this year in 2014. And we'll make sure that you know what that looks like, because that's what's going to happen. Amazon tells a story, and then the story being told here is this particular support level where it broke out right here, and then that's the high. Over here, this is a 50-week moving average. Short term, it's a buy and sell in short to the 10, and this red line is a 20-week moving average, which is slightly right into the half of that weekly bar reversal. Now, There is no oversold condition per se on this weekly chart, other than this is a standard indicator, and that's called the moving average convergence divergence. It's still positive 18 now. And in our world, the thing that we're looking at is the CCI is minus 126 on a weekly level here. If the 10 week you would sell short, you would buy long and sell into the strength and get the other side of that trade in both directional price movements. Should that 10 week anytime within the next couple of weeks cross over that 20 week, well then, hey, Amazon's going to go a lot lower, period. So on a weekly level, where that breakout was, this is that support level right here on the weekly level. Having said that, this is the daily chart. And at the daily 10-day simple moving average at 354, buyers had stepped in. There are a lot of people who have been buying the dips now. And Amazon always gaps up. Here's an earnings gap up. And believe me, their margins are razor thin. But Wall Street has always, look at a gap up, an earnings gap up here. This is what it looked like. And Amazon was on fire for the bull. But I'm sorry, it's a trade. That's what it is. And if we break back down here, that support level is right here at the end of these two bars. So if we break below it, we go lower. That's the support, daily doji reversal. And this is the current price level on Amazon.com. It is deeply oversold on a daily level for a trade. And it has been. These bars have been down here for many days. And like I said, you can trade it long, but every pop up into these 50-day simple moving average is this line. The 20-day is up here. And right now, Amazon on a daily level is sitting right here on the blue line on the 10-day simple. Buy at support, but do not try to hold this stock because it's going to take some time to wear off this deep daily sell signal. So when they get this low, that's when you're a buyer. Because unlike selling short when they get overbought, well, now you're just playing the other end. And basically, it's an intraday trade on Amazon.